Hello, this is Brian Resney, president of Resney Wealth Management, bringing an important update about the economy and the investment markets. 2017, of course, we're in that final quarter. Things are going quite well for the overall U.S. economy. We're waiting to see what's going to happen with taxes. I think it's a 50-50 at this point. Even if tax reform is not passed, which I have a sneaking suspicion it may not be, I firmly feel that the economy will continue to do well in 2018. We are well positioned, in my opinion. We really haven't had any real pullbacks in most asset categories year to date, other than really oil was kind of the big laggard for 2017. But ultimately, the economy is doing well, and it should be doing better. But we like what we see overall, and really the Trump agenda with deregulation and bringing down a lot of the bad business policies for growth really has helped the overall business environment in the U.S. We can continue to see that going into 2018. So even if tax reform isn't passed, I see a rosy 2018. We're not seeing signs of recession. We do a lot of work on this daily, as I talk about on my update videos often. My biggest concern is the growth in the U.S. and that the U.S. stock market doesn't get ahead of itself, not only in growth, but obviously in the performance of those assets. We're looking at adding a little bit more to developed Europe and the emerging markets as we start going into 2018. We're doing some final research on that, and also potentially changing one of our main sectors in our portfolio up. Again, finalizing some research on that. But we do like what we see, generally speaking, not only in the U.S., but in developed Europe starting to come back, and the emerging market economies. One of the things that I like most about the emerging market economies is they are trading at a fairly substantial discount, not only to their earnings growth, but their GDP growth, much cheaper than the U.S. marketplace. But a lot of money has gravitated to the U.S., and one of the areas that we've reduced substantially is, of course, our bond exposure. I firmly believe with the strength that we're seeing in the U.S. economy that the Fed will probably raise rates again another 2 or 3 times in 2018. That's going to hurt a lot of bond investors. We've already reacted to this beforehand, and we'll make more adjustments as necessary and as we see fit. Again, we're not seeing signs of recession or slowdown. We're actually seeing a nice glide path on the way up over with the overall U.S. economy, and especially a better glide path with the emerging market economies, which really does, of course, help the U.S. in addition. If you're a client of our firm and you have any questions, please call the office. And as always, we always appreciate your business, and we always appreciate your referrals. Make sure you have yourself a safe and happy holiday season. This Thanksgiving is coming up. Eat lots of turkey. Make sure you do exercise after the fact. But call us if you do have any questions, concerns, or if you need to schedule a review of your portfolio. And make sure, again, you have yourself a safe and profitable day.